right, cool. Oh, perfect. I'll drop the link now. There you go.
Sorry.
It's all good. It's all good, man. It's all good.
I'm a two-time guy. I usually fail the first time, and the second time I'm good.
And I need the YouTube link.
Oh, oh boy, I need help with that one.
Uh,
I hate this.
there you go. And everybody's back.
Oh, I need to figure out how to get that YouTube link.
Should be at the left corner somewhere. Or right corner somewhere. It won't let me do it because you have control. Found it?
Hold on. You guys might need to help me. I'm just gonna share the screen.
See like
Share
three
your
dots.
screen.
No, not share screen. I'm looking for the YouTube link. Looking
Yeah.
for that.
Should be at the right bottom, and it should say something about embedded.
Oh,
Yep.
is this say links?
Yep.
Oh, I found it. Okay.
And it'll
There
say
you go.
something YouTube.
Yeah. I can't copy and paste it though.
No, you should be able to.
Yeah. Do you guys see it?
The YouTube link?
No, my screen.
Oh, your share screen? Yeah. Perfect.
I'm just trying to. Right here on links.
Yeah, hit links.
But
Hit
it
links.
won't let me copy and paste it.
Just click on it.
It won't let me.
Yeah, double click on it.
It won't let me. See? It won't even let me select all or copy.
So it won't let you double click on it at all.
No.
Mm.
Okay. Oh, let me see if I can.
Alright, that's fine, Matt. This will be recorded anyway, so if
No.
anybody needs to see the
I got
playback,
it.
they can.
I got it right here.
Oh, you found it?
Yep, I'm gonna message it to you.
Yeah, I'll drop it off. All right, guys, and Matt, you can take over.
That should be the right
Screen.
one. Well, make sure it's the right one. I don't want to do this again.
Yeah, that's the right one.
Okay.
All right, perfect.
Yeah, it's more or less confusing that I have 3 screens.
All right, perfect. Everybody see?
Okay.
And start from the beginning, Matt, so everybody knows
Yeah.
how you got to that process. Perfect.
All right. So.
All yours, man. Your floor.
Cool. All right, guys. A little fast forward. Doing this for 2.5 years. I pretty much started with a notebook and just studied. I found out there's a lot of cross pairs out there. Let me just pull up some of my work so you guys can see it real quick. I do smaller classes with some people. This is a class of 2. When UCAD was at its peak over here, right? The 1.32547, right? That 1.33 I saw it hitting. I look for it to come back down, right, to that 1.28 range. Drawn up right over here on the 26th. If we come back, we look at the market now. I pull up the UCAD. It's there, right? It hit there. It's very easy. It's like riding a bike, and I'm going to tell you why I saw that. And I'm going to start up by clearing this, and I'm going to pull it up as a blank page. That's a 400 pip trade, by the way. And the reason why I caught that is if I look at the monthly. Right here, this is one of my favorites. It's called a pintail. I call it a kangaroo tail. It's when a reversal candle forms, and it forms right after the previous monthly candle. It doesn't matter what chart it is, but it has to form after that previous candle. And what happens is the classic pintail, or in my case the kangaroo tail, has to close right at the exit of the previous candle. You see this right here? How it literally pushed up and then came back down. Closed at the previous high on the previous candle. And then another confirmation on a pintail or kangaroo tail is it has to close less than 50%. These are often cases, this is a classic form. This is almost your 100% confirmation for a reversal trend. Okay? And most of your professional traders would enter at that once that closed. So obviously they'd be down, they'd see the red for a little bit, but the real move was down. They just wanted to test, that's all. The dealers were tricking the sellers. So after we acknowledge that candle, we know that the market is looking to reverse. It's basically reversing trend, right? Now we're going to go into the monthly. Another thing is now we see an engulfing candle. That's another confirmation on a reversal trend. So now that we start at the monthly, we always want to start at the higher time frames and we work our way down. Work our way down to our entry, where our entry would be our smaller time frames. So now we're going to work at the weekly. We see an engulfing candle here. On the daily, this is what we see. We see almost as a smaller Elliott wave, or in my case, a stairway effect. Right? We notice it. We don't have to draw anything at this point. And then we're going to come over to here. Now we can draw out our stairway effect. We're going to take it right from the top. We're going to zoom out. We're going to zoom back in. We're going to talk from the top. Now the wick doesn't really matter. What really matters is when it closed. Right? So we're going to draw it all the way down. And then we're going to draw this all the way down. Let's start from the low, pull it up, and bring it back. All right, so this is what we call the stairway effect, or this is what I call the stairway effect. We know that the market is trying to stay in this nice trend line. It's an ugly looking Elliott wave, right? It's an ugly looking Elliott wave. That's why when you see it hit these bottoms, you know it's going to try to, or it's going to try to pull, right? It's going to try to pull. When it hits these over here, it literally broke it broke, right? That doesn't necessarily mean anything. It doesn't mean that it's going to disobey the way it moves. It's trying its best to stay in this trend, right? The U.S. dollar is weakening, coming back down. So when we see here, everybody heard of a double top, triple top, testing resistance, testing support, testing demand? Well, this it's like a trick. So if you see people would think that in order to test, it would have to come back up again, right? It would have to come back up again. But technically, the real resistance is right here. This is really your support, right? This is all your support. It's just a sideways, basically support and demand. So once you see it, this is really your support and your demand, your support. It touched it 1, 2, and 3. That confirmed the sell, right? And this is your double top to that support. This would confirm ultimately that now we're looking for the market to drop, and it's been respecting its zone of the stairway effect. Now, one thing that I always tell the people that I talk to and I train is you buy the lows, you sell the highs, and nothing in between. And the reason why I'm saying that is nothing in between is, well, this. If I were to take this line and draw it right in the middle of the movement, this is one movement down, basically. However, what if we saw this hit this demand zone and to come back up, and we decided to jump in right here? Well, what's happening here? The market's going to basically this middle consolidation almost is looking at a higher time frame. It's not how I should say, it's not finishing the real move, right? The real move, which is basically fell, consolidated, and then made that basically consolidation into a rise, into forming a higher high, into a lower low, right? So here's your higher high into that lower low, higher high, and now it's probably going to form that lower low. But right now we're right in the middle, so we really don't want to touch anything yet. These are safety trades. You always want to be in that safety zone. That's why here was a perfect trade. This is something you could have left in for, for 3-4 days and just let it ride. That's the perfect trade that you want to be in. Now, I get it. We know where the move is going. Let's wait for a bullish candle to form and then sell it. However, the risk that you have there is that you might see red for a longer period of time that you'd rather want to be in. I understand we'd rather obviously want to see blue first. So if we want to see blue first, let's wait for that nice setup. Let's wait for that nice setup. Don't get carried away and try to get in, because that's the one problem with that is the dealer can only do so much. But the point is to try to beat the dealer. We don't want to give the dealer an option whether it wants to come down or come back up. That way, when we're at the support here, the dealer can't do anything above that. It can't just decide, okay, I'm going to click up and go high. It has to come back down now, because that's what the dealer did here, right? We saw everyone was probably looking for a seller right here, and that's why it did all this down, up, down, up. That's why you get those double tops, those triple tops, and then you have those double bottoms and triple bottoms. That's just the dealer trying to trick you into tricking sellers. And then you get buyers, and then buyers are cashing, are taking their negatives, and then the sellers are taking the negatives. It's just one big trying to get all your money in. That's why you always want to wait for those perfect setups. And what's the worst thing that can happen? You just leave that pair alone and deal with the other 30 odd different other pairs to deal with. So that's why I took that as a sell. I took that as a trade, and I made that, I publicized it just because that's the setup that we have. It's so easy. Don't overcomplicate it. That's why I don't have these RSIs down here. I don't have overbought or oversold down here. It's really easy once you start to see these things like this. You can draw your price actions. You can draw all that all day. You can make it look like. Let me see what else I have over here. AUDNZ. No, not that. Yeah, it was AUDNZ. So if we take AUDNZD, right? This is another one. So I'll pull back here. Here we go. AUDNZD, right? This was a few days ago, I think, on the 26th, right? I saw the harmonic. However, I did see it touching in that support, in that area of support. And when we see a head and shoulders. This is a bigger time frame. This is on the 4-hour, right? So the market, it's not like looking at a 15-minute or a 30-minute where we kind of know it's going to come back up, test that high, and then drop right back down. So at this point, it could have already made that double top and then come back down. However, if you're looking at a smaller time frame, it probably had 3, 4, 5 different tops. And then this is just a level. So you kind of have to give the market a little leeway. It could come back up, but the real move is really down. And it's going to move in, more than likely, it's going to move in levels. So this was level 1, not confirmed yet. It could have hit the top again and then come back down, but the real move was down. And this is level 2, then level 3. And the reason why I'm saying this is level 3 is because this is the area of swing. This is really the area where it just keeps swinging and swinging, almost like that consolidation, almost like a house. Just keeps building and building right in this general area. And then if we look at AUDNZD now, or what it did on that 4-hour, right, it came down. It came down, what, 200 pips. Now this looks like an area of, this looks like level 2, or an area of consolidation at the moment. I mean, now we have news coming up, so who knows what's going to happen here. It's more or less going to be the USD pairs, but it could fluctuate depending on, anything could really make a move at this point. So, we want to look at this on Monday, see what happens on Friday. It might give us another setup to go down, but I'm looking for AUDNZD to come down. One, because well, we have the head and shoulders, and two, it's at a high. Right? Oh, sorry. Let me take a look at this. And if you notice here, if there's one big inverted head and shoulders versus the smaller frame head and shoulders on the H4, we notice that once it drops to that low, and then comes back up to the high, it does this little form of consolidation. See? Little form of consolidation, little form of consolidation. What are we going to expect here? Little consolidation into a breakout. Into a breakout. Whether it's up or down, I'd be looking more on the up, because if we pull out a little bit, we're at a very low, that's for sure. We're not in the middle, we're not in the high, we're in the very low. So we could be looking for a breakout again to a higher high. But at this moment, we'd be looking for it to come back down to that 1.095 range, and then swing right back up. Swing right back up. It has to hold value. So when the pair is going to hold value for a while, that's how you get the consolidation. So you guys see how I did support and demand on that UCAD? It's basically a sideways support and demand. In other words, over here, sideways support and demand. It doesn't matter if it was this way, that way, or coming down this way, or going up. It's still a support and demand, a little funky, that's all. Let me see if I can find something else that shows a nice EJ2, actually. EJ was right? Looking for it to come up to that mid 128 range, that low 129 range, right? And get up to that 128 range while it was sitting at that 127. And the reason for that is this. So I will draw it from scratch. Right? Pull it up a little bit. It's what you call an area of interest. We want to see it hit that line again. That's what we want to do. However, if it doesn't mean it's not going to have there anytime. Doesn't mean it's not going to have there soon. It could drop a little bit and then come right back up to that zone. But ultimately, when it's so far away, we know it still wants to head to that direction because it's respecting a trend still. Oh my gosh. It's ultimately respecting that trend. And the trend is our friend. No matter what, our trend is our friend. We don't want to go against it. And that's when harmonics come in. Harmonics come in is when we're basically looking for that reversal. And necessarily, harmonics is really, it's the best way to explain it is it is catching those changes in the market. But it's not necessarily a now. It's technically a soon. It's not necessarily now. So whenever you see an entry on the scanner, just because it says entry does not mean to enter right there. Look at the bigger picture. If you notice on this, I can't get on the scanner, but let me see if I don't have the scanner. But if you look at the scanner, you see it zoomed in. It doesn't show you the bigger picture. So the best way to trade off the scanner is to go to a blank template, look, back out on the template and see if what the scanner is saying is really, enter at that point. Don't get me wrong, the scanner could probably be correct. However, you always, when there's money involved, your own money, you always want to double check to make sure. It doesn't, remember, any harmonics are anywhere between 85% to 92% correct. But it doesn't mean it's at that point. It's a soon, not a now. So we want to pull it back on a higher time frame and just to see. Where if we saw harmonic scanner, but we said, let's say the entry said right here, Okay, well, the problem here is this. There's no established resistance here. Nothing says that this is an established resistance. Nothing says that until it breaks this point right here. It needs to hit it more than once on a swing in order for it to be considered a resistance. So if it hit right here, right? If it hit here, came back up, hit there again, then came back down, then hit it again, that would be considered a resistance. Nothing's considered a resistance unless it hits it more than once. Just like here, 1, 2, 3, 4, 5, 6, 7. That's considered a zone of resistance, or your area of support. That's where the market's going to reject itself because it doesn't want to come up anymore. It's going to reject itself here, then come back down. Right? That's why around here you would be looking for a sell to be safe. You never want to be, try to get in that little blue box, because the problem here is that now you got dealers thinking that you're going to do the same. You're going to enter there, and then they're going to push it right back down, and then you're going to miss your awesome entry, right? That's why whenever you have your TP or your entry, kind of move it around a little bit. If you're looking to get in at 120, 128 even, put it at 127.9, just to be safe. 127.9, because sometimes if you have it at 128 sell pending, you'll see that thing come up to 127.9999999 and then drop back down, and then you'll be like, what? And then you're at work or doing what you're doing or cleaning the house and you're not paying attention. It's terrible. So kind of tweak it a little bit. If your TP is at 126, put that thing at 126.4. Give yourself a little room. All right, just take it and leave it. Another thing too is, Stevenson was telling me that there's not a lot of new people trading. When I first started live, right? I didn't do demo either. I literally just watched the markets for a while, and I just decided that, hey, I'm just going to jump in because I'm starting to see setups and I'm missing out on a lot of opportunity. Don't get me wrong. I've blown many accounts. Actually, I think last week I blew a $400 mini account. I mean, I had my bigger account, but I blew my $400 mini account because I decided to put a 2 lot on EA. I decided to put a bigger lot, a big giant lot. I'm literally risking like 17 pips before the thing cuts me out. And if I literally called the buy on it, the thing decided to pull me out because it dropped 25, 30 pips. Pulled me out, and I missed out on 250 pips. So don't over leverage yourself. Take it easy, and remove the emotion, emotionality. Remove the emotions, just because you'll miss a lot of opportunities when you hit in the market, especially with you'll find yourself cutting your losses quicker when the real move is really down. You're going to see red from time to time, but don't think that the market's not going to move the way you think it's going to go. It might really move that way. It's just tricking you. It's going to come right back up, and you're going to fall for it. It's going to pull you out. So emotions is a key role when it comes to trading. It's not easy. Remember, the market is literally out there to take the money away from you. That's really what it's really out there to do that. You just got to know. You just got to be educated. That's all. Listen to those who have been doing it a little longer, and then you'll get there too. I mean, my uncle knew a lot more about this than I did, and I think today I'm probably smarter than he is at it. And then know your cross pairs too, because it'll help. I helped a lot of guys that I trade with, last month on oil and on UCAD, because they move. Know your economics too, because that helps too. That you're just leveraging yourself. You're not leveraging the market. When UCAD and oil they cross work with each other. When oil is moving up, UCAD is moving down, and when UCAD is moving up, oil is moving down. That's a little trick too. And then you're going to find out that one's going to work a lot faster than the other. Like EA and AU, they're also cross moves as well. Right? When EA moves up, AU moves down, and when AU moves up, EA comes down. Right? And look what we have here. EA is just one big giant buy right now. Right? That thing's gonna come up. It's just been in really an area of consolidation, almost as if it's in one area of level, right? And you can call. It's not just You know, you can always set your buy in and just look at it, you know, next year and see the profits that you'll make, but know in the general direction it's heading, right? We know that it's going to come up now. And then, but look at it at a smaller angle here. If we come in, now we're going to see a bunch of opportunities, right? I caught this buy, then we catch this sell. It's really easy. And then this is our support and demand. It's not sideways, which is nice. So look what happened, right? It hit that area of demand. It hit this top of support. Right here, it was established. It hit it twice, and it bounced. That's your established area, right? A lot of professional traders wouldn't have even touched it until it was over here, right? They wouldn't have even traded it anywhere around here until it got over here, because now they know it's even more of an established resistance. It's higher probability. I mean, would you let the person, would you cheat off somebody's test that's got a mid-sized probability? Would you cheat off the guy that's got a higher probability? I'd be cheating off the guy that's a higher probability. So it's always great to take a safer trade. Literally, if you put a buy in right here, you're considered the safe zone. When you're in the safe zone, that's something where you can let it ride for a while and don't have to worry about looking back at it for a few days or even in a week, right? And look what happened. It pretty much get into our area of support. Right? This is what we'd be looking for a TP. And remember, I always say, don't get greedy. Just take what you can get. Put if your TP's at right here, 1.49, just 494. Just put the TP at 1.494. 1.49 even that. Just make it easier on yourself. Just take it and leave it. If the market comes back up 20, 30 pips after your TP, who cares? You already made what you made. It's fine. 30, 40, 50. Some of you could be $300, depending on what kind of lot you use. But just take what you can get, right? Just take what's guaranteed, I should say. And then look what happened here. Hit that area of support. And remember, when the market hits the area of support, it's going to do one thing and one thing only. If it's the real area of support, now it needs to find demand. And it hits the same thing and vice versa. If it hits demand, it needs to find support. That's why you see it touch this area, right? Didn't touch it again. It almost made that W to trick everybody, right? Okay, I'm going to sell. Oh, crap, it's coming back up. Now I'm going to pull my profits. Or, okay, I'm going to get back in for a sell. Oh, God, it came back up. Took everybody. Now everybody's pulling their profits or taking red, whichever. And then now it hit that area of demand, right? Don't let the market trick you. Don't take a trade unless you're at least 98%. Right? Because you don't want to say to yourself like, oh boy, did I do the wrong thing? Did I do the wrong thing? Because now you're just bringing emotions into it. Back to UCAD, right? Back to right here, we should know dang well that it's going to drop to at least middle of consolidation, just like it always does, even when it comes up to the buy, right? It's going to come to that middle of consolidation. You want to sell, middle of consolidation. Sell, middle of consolidation. So we've been pulling our profits in that middle line, right in the middle of support and demand. Let's come back to that AEA. And then we don't want to be buying or selling here for a couple reasons. One is my saying, buy the lows, sell the highs, nothing in between. Because the problem is now you're going to be gambling with the market. The market's going to be probably doing something stupid like this. You can scalp it, don't get me wrong, absolutely. If you see that drop, if it does this thing that's so consistent, try to find something that's consistent over here. I don't know, I guess right here, right? You see it kind of bouncing off an area. I mean, I guess right here you could, right? So I guess right here you could, if it established itself, you guys could just scalp it. But why? That's boring. Just get into a better trade where you can make more money. Or I mean, you don't want to over leverage here. And if you normally trade on half lots, and now you want to trade on a 2 lot or a 1 lot, you're just over leveraging. What if the market just wants to make a move and fake you out? Because now the dealer has full control over you. You want to have full control over the dealer. Don't make it the other way around. Right? So let it make its top. Let it establish the zone again, and then jump back in. Or we can look at another cross pair, which would be AU. What do we know about AU? Now it looks like it wants to establish a what? A stairway effect, right? So here you can see it's leveling off. It's going to level up. Hopefully it's in that area. It's in my area of interest. It's in my POI, my point of interest, and my TOI, target of interest, would be somewheres down here, right? Because that's ultimately what it wants it to do. That's ultimately what it's going to do. It's going to come up to this right around here. Right? Let's not get greedy though. Let's put, a TP somewhere around, right there. It's a big move. It's a very big move, 700 pips. But I mean, if you can make it on UCAD 400 pips, what makes it, why can't we make 700 pips on AU? And that's one of the key, the best things about knowing cross pairs. AU's moving, is going to be moving down, which would be pushing EA up, and vice versa. EA is a little faster on the gun, so if EA starts to make it move, it gives us a chance to get an AU if we missed it. You know what I mean? So this is ultimately what I'll be looking for. I'm looking for. I already see the sell right now, right? Oh boy, a little off there. Might get moved. I already see. Just adjust some. Okay. I already see the sell right now. It's like making like the bat pattern. But give the market a chance. Give the market a chance. We're at 0.77213. I see 0.77 around there. So 40 to 45 pips could be our area of entry right here. It's going to come up to this area, and then it's going to fall because it wants to, and it's just shy every time. Doesn't quite finish it. Let me see something else. All right, gold. So let's see gold. All right, gold right here. All right, so if you see gold, this was a few days ago on the 26th, the last week or Sunday, whichever day it was. It was at 1216, right? And I didn't want to get in yet. I didn't want anybody to get in yet. I didn't want, some of the guys this Tyler, hey Tyler, I didn't want anybody to get in anything yet. I wanted to see. I mean, that would be an area you could get in. It's an interest area, but it's not quite what I want to see yet. I wanted to see it hit this right here. And it doesn't mean that I'm saying to enter here because it's an established anything. It doesn't mean it's established demand, right? The only reason why I'm saying to let it do something like this is because you're giving the market a chance. You're giving the market room, right? People are probably right here like, oh crap, I'm buying. I'm going to buy right here. The reason why it's going to push down is, well, the only simple reason for it is because the market's just going to trick you. Oh crap, okay, well now, all right, it's pushing down. The market's probably actually a sell. That's not the case. Those real fake moves is actually, it's just a fake move. The real move is the opposite of that fake move. Okay, I mean, it's really easy. You can catch them every single time. Catch the sell, catch the sell. Now we can catch the buy, right? And let's pull back a little bit, right? 1216. Where the heck is it? $12.16. Around here, right? 12.16. That's where that was that area of consolidation. And then I said, give the market a chance to do something. Just change the color. Give the market a chance. Don't be jumping into stuff right away. right? Give that market that chance. Give it that pull down, and then boom. Literally 100% accuracy. I've told Tyler to put a buy limit right at 12.10. The thing hit. And he made he's made the best money he's ever made trading. Not using the scanner, just listening to somebody. That's all. And then it's gonna do, this is a news thing. This was all news right here. This, for the most part, this was all news. That big jump. Now, there's one thing that I tell a buddy Tim of mine is when it comes to news, it's interesting. Think of it as, I guess the way that I think of it is this: everybody goes to a party and they usually give themselves a limit. I'm only going to drink 10 beers tonight over the course of the 6-hour party, whichever. My limit is 10 beers, or whatever it may be. Now, if you drink 10 beers in an hour, you're probably going to have to sit down for a little bit and relax, take a breather, and chill. That's exactly what's going to happen here, right? The market got way too crazy. Boom, way too crazy. Then what's going to happen? It needs to take a break. It needs to take a breather. It's going to pull down. And I always say, off of news, once news relaxes a little bit, give it 50% retrace, minimum, right? 50% minimum. If the news candle ends, and if it's a thing shot right up, put a sell at the top of that thing. Let it ride. Give it a 50% retrace. Draw the Fibonacci up. If we were going to draw a fib on the news, just the news, we'd be around here. Oh, God, I always draw this backwards. Just the news. Right? So at that 50%, we would have been taking profits. It's not all of the profits, but we would have been taking 50% of the profits. Which is not bad at all, right? That's 90 pips for gold. What I'm looking to see it do, well, that's what I was wanting to see it do, was to come back down into this area of consolidation. Because it did make that head and shoulders right here, but I would consider this an area of consolidation because it did its little consolidation dilemma here and then pushed up. And I kind of thought it was too fast. I'd be looking for it to come around here. However, I'm ultimately looking for gold to be coming up to that 1290 range. So I would look for an intelligent area to enter for a buy, right? And another thing too is, don't sell on a bear candle or don't buy on a bull candle. Well, one is the thing decides to come back down a little bit. Now you're going to see red for a little longer than you decided to, that you want, out of your comfort zone, I should say. Let me just see if I can find a good example of it. I think gold's probably a bad idea to give an example. That's why. Yeah, see right here. So I guess it's not the best example, but it is an example. So we're watching the market on a smaller time frame because we want to catch on a sell, right? We want to catch a sell because we see it dropping. We know that it's dropping. It's made all these wicks up here, and then we start to see it drop. Oh my God, I'm gonna get in right here because I'm starting to see this thing pull down now. So we drop our sell right here. Oh my God, now the thing just dropped, pulled way up. If you're putting in a one standard, you're already negative $200. It's gonna scare the crap out of you. Wait for a bull candle to form on a smaller time frame, and then drop your sell. It's gonna actually wait for that. So if we're on a 30-minute, wait for that 30-minute to end on a bull candle, and then jump in. Don't get in the middle of it because it can still do some funky stuff. So you buy on a bear, sell on a bull. It's easy. It just gives you a better. If you already missed that precision entry, right? This would be our safe zone. Safe zone. If you sold anywhere on here, you're safe zone. You don't have to worry about putting. You can put a stop loss right at your entry, and you're good. You're golden. But if we're not in that safe zone, let's prepare to see red for a little bit. That's all. But so the best thing to do is the timing of that red. Let's not see the red for a very long time. Let's keep it minimal. Does anybody have any questions so far? Anybody?
Nah, you good, Matt. Continue. Just keep breaking it down. You know what I mean? Simplify it. You know what I'm saying? 'Cause like I said, we got a lot of new people. So.
All right. All right. So for the new guys, so you can study. Actually, what I recommend to do is actually let me pull this up on a dip. I have a few templates that I work with, mainly this one because I've trained. I've just been doing it long enough where I can trade on a naked chart. But another thing, sometimes I overlook stuff, and what I do is I'll get my on this template right here. It looks a little confusing at first, but let me help out. This is really for smaller time frames, and the reason for that is this is really breaking down the sessions, right? This is New York and Asia. Simple. I'm sorry. Yeah. New York and Asia, and then obviously before New York we have London. Right, we're currently in Asia. Right, it's 11:32 Eastern. And then it gives us the pips that it moved during that session. Right, 30 pips. So EG's been fairly quiet when it comes to moving in relatively any session other than London, right? Right, London, it makes those big moves. So knowing what session you're trading in and what pairs to be looking at, I mean, I just don't see the reason really to get in on a pair when it's really quiet time for that pair. The pair is still going to move for the most part. It's not the weekend. It's still during the week. So the pair is going to still establish value because the markets are open 24 hours. So it still has to establish value and hold value. So it's still going to move here and there, but the real timing is when the market is most active. In this case, EG is most active during London. So when you start to trade in quiet time, it's not as you're not going to see movement as much. So it could be confusing to the novice trader. So maybe if someone reaches out to me, I can help them get this template. This template is no longer available, unfortunately. And a good friend of mine gave me this as a present who had it for a while. So this is nice to use, and it could help actually with a lot of some newer traders. So let's clear this out of the way. Now, I guess we'll go to. See, I was going to do harmonics. I've been studying harmonics going on 8.5 months now, and
Harmonics a little advanced.
yeah. Okay, you don't want me to go there yet? Okay.
Yeah. I'll just probably stick to like supply and demand. That's a little easier.
Okay.
Cover that a little bit, and then we can cover harmonics and like Fibonacci retracements on like the next webinar.
Cool.
Webinar.
Sweet. All right, so let's do UJ. It's a popular pair to trade. All right, so UJ is right. It looks like a small stairway. It's in a. We've already established an area of demand. Let's pull this back down a little bit. This is an area of demand, an area of support, right? So two areas of resistance. Right now we're pretty much right in the middle. middle of consolidation, or in the middle of the swing, I should say. So what does that tell us? Well, one is we want to see it continue its way down. So the best way to catch something like this is you want to see it make a bull move and then catch it on a sell. Catch it on a sell. And the reason why I'm saying that is because it already made its established touch. It can get a little risky trading it right in the middle because, well, if we look here, look, it made a touch, hit that middle, came back up. Okay, came back down, hit that middle, and then came back up. And then did it again. And then did its real move. So the only thing about risky is now, because we're in the middle of a trade, is why I say buy the low, sell the high, nothing in between. Nothing in between. We're in between. Once you start making a buy or a sell here, oh boy, it can get bad things can happen. It can definitely happen because you rightfully so don't know if it's going to come back up again in touch because due to history, and history repeats itself, don't let anybody else tell you otherwise, it will, it can still do that. It can still, okay, I'm not ready to come back down. I'm going to come back up. But if we look on, let's see, we know that on the monthly, we are relatively on a buy. I mean, I'm sorry, on a sell because now we have a reversal trend, right? Reversal trend. And this is now an established resistance. We hit it more than once on 1, 2, 3, 4, 5 different occasions. Because now we're looking at a higher time frame. Could have been more on a smaller time frame, but at the very least on a higher time frame. And we see it making this little like flag pattern. So it looks like the market, so let's draw like I guess a little flag pattern. That's basically, a flag pattern is just basically just a small, in smaller terms, a staircase pattern on a small time frame. All right, so when someone says flag pattern, it should be relatively focused on a higher time frame. All right, that's middle of consolidation. So we don't want to be touching anything if it's sitting right in the middle, right where it is now. So, but looking at the higher time frame on the weekly, it looks like it wants to engulf the previous candle, which is this bull candle here. So it looks like it wants to come back to this 111. And when it gets to that 111, we'll be looking at one thing and one thing only. We'll be looking at a buy. But we need to keep in consideration that due to what's done in the past, it broke it briefly and then came back up. It broke it briefly during that week and then came back up. So we want to play it safe. So when we play it safe, that's what we're going to do. We'll come to the smaller time frame. Start working the smaller time frame. If we still see it come back down, okay, it looks like it's just come back down a little bit, and then we're going to look for that option to buy. Keep in mind the option to buy. So if we make our entry, keep in consideration the market's still moving. So it could still move a little bit downwards, but the whole goal is that we want a safe area to entry. That gives us that safe zone. The safe zone is the most comfortable thing to say to yourself is when you're trading currencies. There's nothing better to say to yourself than I'm in the safe zone. I don't have to worry about anything. Once you can really say that and be 100% comfortable with your trade, you're on the right path. Once you start, you'll start seeing more profits. None of that roller coaster stuff where one week you make blue, one week the next week you make red, vice versa. Once you learn to make those safe precision entries and make those safe zones, you'll literally catch on it so quick. You'll catch on it like snapping your finger, like riding a bike, right? It's just knowing where the market's heading. The market's coming down on UJ, but it can't do it right away. That's like drinking too much in an hour. It needs to hold. It's in this little structure here of consolidation. And don't let anybody fool you, but on a higher time frame, trading on consolidation is the best way to make money. Unless you're a long-term trader, you just trade stocks if you're going to do that. I mean, most people will drop a sell on the very top of UCAD way back when in the 1.40 range. I mean, God bless you if you jumped in that thing on a sell, but well, for the most part, most traders are in there not for very long. They're in for it's a merely a short-term um, decision market. Really, is what trading currencies is. More short-term. It's so volatile. That's why. So once you see, this is technically a consolidation. So consolidation is the best way to make your money on higher time frames. Daily is probably the best way to look at this, actually. Sorry, go to it. So once you establish your zone, establish your demand, establish your support, once it hits that demand and it hits that support, that you easily can look for that buy or sell. Let me just push this down a little bit. There we go. Technically, it's the real area is when it closed, but let's give the market a little chance here. So we'd be looking in this general area. So if it comes back down, you could probably see it wick around here. We'll probably see the thing wick around here, right, to respect that trend. So we're going to see something probably like this. But because we're in the middle, right, because we're right in the middle now, it could still do what it did over here, right? It could still come down, be in that little middle, come back up, and then come back down. So once it breaks this point, complete it, we know it's heading to the right direction. Now don't be, like I said, the worst thing is bring emotions into it. Don't kill yourself if you like, oh, I missed that opportunity. I missed that sell opportunity at 113.7. I wish I took it, but now I'm gonna try to enter somewhere around here or wherever. When I see a nice option to enter, don't do that. There's all these different pairs to look at. Something will give you an eye. I study almost every single pair Tuesdays through Thursdays. So, don't be afraid. It's just, you'd rather see blue at the end of the day. It's like going to the casino. You're gonna get all antsy fancy about, winning a big pot, but just wait for your time to come. A lot of people make more money just waiting for aces and kings than they do just trading off of, suited connectors and just, offset connectors. Same thing with the market. Just let it do what the direction it's going to go to. Sometimes it'll fake out. You don't want to be trapped in that, right? It's the one that's going to be the hardest thing to get over, really. So once you learn the buy the low, sell the high, nothing in between, you'll make a fortune. I guarantee it. I do. So once you learn that one quote, you'll thank yourself. You'll thank me. All right, let's look at something else. So let's look for UJ to come down to this area. We have NFP coming up tomorrow. Some of the best traders in the world some of the banks don't even trade during that time period. Let's just, if you're going to trade it, trade with somebody that's been doing it for a while. If you're novice, just stay away. It's very volatile. The market's going to do some crazy stuff. I promise you. You'll see that thing jump up 100 pips and then drop 400. So it's very volatile. You'll blow 3 accounts if you keep rebuying. So try to stay away if you haven't been doing it very long. Sit back and watch the market do what it's got to do, because that's all about economics. So that's unemployments and things like that, and rates, and it gets very confusing. So let the market do what it's going to do tomorrow. If you've been trading for a while, great. If you know what you're doing, great. Then go ahead. I've been doing trading for a while. Sometimes I don't even trade NFP. I'll go months without trading NFP. I'm not trading tomorrow. So, just watch what it's going to do. You're probably better off just catching on retracements off of NFP. You're probably better off just waiting for that candle to finish and then waiting for that thing to retrace down. But if you haven't been doing it for very long, try your best to stay away. All right, so let's go look at a different pair. And don't be afraid to get resources too. So let me pull up for a second. Don't be afraid to get resources. So bear with me, guys. Okay. You get. Oh, can you guys hear me? Am I even on? You guys
Yes, I can hear you.
Oh my! I'm sorry, guys. I don't know what happened.
Yeah, you fell off. You're all good.
Oh Jesus! Did you guys hear anything that I said?
No.
I think I was literally talking there for like 5 minutes by myself.
Yeah.
All right. Okay. All right. Let me get back to this then. Sorry, guys. I got buttons everywhere. 2 keyboards, 3 screens. You guys see this? All right. I hope you guys can see this. Okay. Um, what I was saying, that I apparently I disconnected or something. What I was saying is that a tool to use. Whether or not you have the scanner, you're drawing you see the scanner on there, and that's a tool to use. It's a tool. It's not a. This is my last confirmation. This is always my very last tool. I always draw up my support and demands. I see if there's a head and shoulder forming. I look to see any Elliott waves. Um, a little bit of everything. Seeing if I'm looking at trends, and then I'll draw my harmonics at the very last if I see it, like here. I'll see it, and then I'll also look at crossover pairs too if I see more on a crossover pair. So even though you only have your two eyes, then you have the scanner, right? I don't have the scanner, but a tool that I use as well. It's just another set of eyes. I don't want to disconnect this time. It's not what I want to do. Okay. So here's FX Street. I have it saved, and it's just for crossover pairs and USD pairs, right? There's only a select few, but these are also banks and other people who trade, and it's like I said, this is not a confirmation, but it gives you a little insight. I guess this is another set of eyes that you can make your judgment on. So if you're looking for the market to come up to this point during the week, right? Obviously not you, Jay. Looks like everyone's even. But if you see a high percentage on bullish and you saw the same thing, now you're like, okay, so another pair of eyes saw the same thing that I'm seeing versus obviously the comparables of all these fellas. But it's not something you want to trade solely off of. It's just a tool to use. This is just a nice tool to have. Same thing going on. Forex Factory. It's same with the news. When you start to trade, make sure there's news. Make sure if there's any major news that day or anything before I even buy or sell anything. I always confirm if there's some major news going on. That's very important. Because if you're trading on a high volatile news pair for the day, you could find yourself in a tough situation at some point. You might not even see it coming. It could be a nice curveball right at you. So you want to confirm that right away. So before you make trades and stuff, you should always check in here. All right. These are my confirmations. This is my harmonic scanner right here. This is my harmonic scanner, and the poles is also my tool, my harmonic scanner. I have many harmonic scanners. I just don't have the actual one. Right? So it's nice to have all these tools to use and use that. Don't disregard any of that because you're trying to be an awesome trader. You don't want to listen to anybody else or listen to anything. Use these. It's basically studying. Study and become an awesome trader where you can look at these charts and draw something pretty up and then be proud of yourself at the end of the day. Let's see. I wish you guys asked me questions though. It's okay though. How about EU? I think I already have a draw up on it, but I think I do actually. Oh, there we go. 1 second. I drew up EU. Yeah, I think the day before yesterday. So give me a second. Oh wow. Okay. All right. So here's EU. Looks like it's at 1.137 quiet time, just doing its thing. Let me just pull this up because I did do EU the other 2 days ago, the day before. Something like that. See, guys, I do use this. I see it as a tool. I take it into consideration considerably. So this is what I drew up on the 29th, so 2 days ago. Right, I marked up 2 Fibonacci's because I see here's a high over here, and then here's another high over here, based off of 2 different lows. So I wanted to see in comparison versus when it touched, and if it was and what fib it was, I guess, respecting. So it respected the 88.8 over here, right? Respected the 88.8 off the previous high. So I'm looking for it to respect the 88.8 off the previous high, right? Below it. It went below it, right? 88.8 is over here. It was below it, about 90 pips to 100 pips. It fell below. It didn't complete it. Same thing here. So the 88.8 was over here. So I was looking for 90 to 100 pips, so somewhere around here. But for a nice comfortable entry, right? Nice comfortable entry around here, right in the middle. It was at 1.29974. I had this thing sit, at least my harmonic, doesn't mean anything. Just avoid the harmonic. Pretend it's not there. Look at the shade of blue. The blue shade is really what you want to look at. When I draw, I'll be posting stuff like this to the Mac Club trading room. So don't. I'll be doing that. You'll see a lot of this. So when you see a harmonic like this, don't take that in consideration. Look at the blue shade, right? This is kind of like the pinpoint. I'm basically saying buy right here. Is basically what I'm saying. I'm saying buy, because I know it's going to come up here into the mid area. So I was looking for 1.137650 area. Obviously, use your own smaller entry precision to give yourself that area. I'm giving you the right direction, but use your own little nicks to make that entry. You know, if you see it kind of pulling up a little bit on the 1 minute, do that. Take that in consideration. Those 1 minutes, those 5 minutes, those are very helpful when you would make those entries. And then what did it do? Let's see, from 1.129. So right here was when I made that, when I did all that draw up. So this thing jumped 130 pips. That would have been a nice 130 pip buy, right? And it touched that. It actually did touch that 1.141 area, right? It did make that. Let's go back. So right in the middle, and then that's when we want to look for it to move. But now we're coming up to NFP, so we want to wait and see what NFP does, and then based on what NFP does, they'll set us up for Monday nicely. All right, but this was basically a buy for the shorter week, which is nice. This is a higher time frame, the daily. Another thing for novice traders, maybe intermediate traders, pairs move in micros and commodities move in pips. Okay, so there's more risk involved. So if you're more of a novice trader, you haven't been doing it for very long. When I say novice, I'm saying less than a year. Less than a year, you should still consider yourself a novice because you probably know less than 40% of the market and what it does. Okay? If you've been trading longer than a year, then then you probably already have traded full time on commodities. But just remember that when you're trading on such, it can be very risky, especially oil, because it's moving pips. So if you put in one standard, it's going to move $10 every single time it moves up or down. It's going to move $10. Or if you put in 10 lot, it's going to move $100. Or a 5 lot, it's moving 50. Same thing with gold. So commodities is a little bit more risky. So pairs, micros gives you more, I guess more leverage, I should say. So here, okay, this is a good one. So British Pound Chief, very noticeable. Okay, this is. I'm trying to. All right, so this was all basically price action along with a stairway, right? This is a stairway, right? Almost like an Elliott wave. So you get one wave, your two wave, your three wave, your four wave, your five wave. I don't know if anybody does Elliott waves, but similarity here. So we're gonna do this one last. This is gonna be the last one, guys. Why I did it and how I did it. So we do notice that this is our stairway, It did a stairway. It made that big rise at one point, and now it's basically going to do its 100% retrace down to that looks like a area of demand. Same thing here. And then what we noticed that it formed a head and shoulders. Now, I don't know if you guys. Um, let me see. Let me just Google this really quick. I know there's two patterns involved. There's two patterns involved when you have head and shoulders. Right, there's two patterns, but let me just pull it up. Click here. All right. So when you have a pattern, so right, this is a head and shoulder. You see two patterns, and then it makes its move. That's where people get those head and shoulders, inverted head and shoulders from. Right. So to make itself easier for you, just drop the head and shoulders. Now you know the market's going to move very quick into one direction only, and that's this way. Right. And now it's going to come back down, probably to test the low again, and then come back up again. All right, so head and shoulders, two patterns, 1, 2, big move. Same thing if it were to be upside down the other way, up top. Same thing, right? It would be something like this, right? The big consolidation area, and then shoot up, come back down, consolidation area, and then drop. All right, same thing here, inverted up. I think we're wrapping it up, guys. Does anybody have any questions? You can unmute yourself. Questions will get answers. If not, we'll do it again. You'll see me a lot.
I got a question.
Sure.
Does the news normally follow the trend, or it can be kind of random most of the time?
The news can be. The news is definitely random. It's not something that you're prepared for. I mean, when you go on Forex Factory, you'll see forecasts for NFP, but none of them are 100%. Once you know is when they're up in the podium making those, right, when news starts, when they're up at the podium. That's the only time really it's going to be expected. This thing, if the real move is, I mean, let's pull up right here. GB Chief is really no ultimate trend, but if it's down, news could push it up and then come down for the rest of the quarter. It could come back down. I mean, shoot up for news and then come back down.
Oh, okay, so it could initially push it up or down, but then
correct.
Follow back the trend eventually.
Mm-hmm. Yep.
Okay.
It's volatile. That's why a lot of professional traders, more experienced traders, don't even bother with NFP because it's really it's just crazy. The thing will jump up 100 pips and then drop down 400, or vice versa. It's unless if you have a mentor out there that does a lot of NFP news trading, or me, my friend Tim, we do some NFP trading. He does it more than I do, but yeah, if you can get somebody that knows what they're doing, I mean, anyways, you should be staying away from it. It's very volatile, especially if you haven't been doing it for very long. Just let the market take Friday as a vacation. Take all your profits from Monday through Thursday.
All right, sounds good.
All right. Anybody else have any questions? Wrapping it up.
All right.
Thanks
everybody for joining us on this webinar. Thank you, Matthew, for the great introduction to Forex. Couple setups, guys. So these are the things you want to definitely look out for when trading. Like we stated before, tomorrow's really NFP. It's a very hectic day. I mean, unless I see a great setup or something like that, I might call something out. But otherwise, like Matthew stated, it's very hectic. Nobody can really predict where the market's going to go because that's really the whole point of news. You know what I mean? It's really a 50-50. So if you're brand new and you don't really know what you're doing, Stay out of the market. Don't risk putting your money on the line. Like I said, we'll be doing more of this. Try to make it a weekly thing. We'll be dropping a lot of content. A lot of videos will be coming. So make sure you plug in your team, and we'll see you next time on the next webinar. Thank you guys. Matthew, you can turn off the live
Yep.
webinar. Warfare.